Hi, Akash. Welcome to Big Red Ventures VC interview channel. I'm Ankur. I'm a fund manager at Big Red Ventures, and let's start off with the interview.
Sure. Excited to meet you and excited for this interview.
Super excited here as well. This interview is targeted towards college students and at Cornell and otherwise who are looking to learn from people like you in your experience. So, let me just start off with the first question. Uh, can you talk about your journey into venture capital?
hmm Yeah, I think a lot of VCs say this, so maybe I sound a little cliched, but it was definitely not planned, and a lot of serendipity and things just being there at the right time, in the right place was a big factor. But there's a certain amount of preparation that goes in there as well to make when those serendipitous moments do arrive to make them click. I've always been a technologist. I've been coding since high school. Studied on computer science in undergrad, went to Cornell for my master's, got in CS. And, I was fascinated always. I guess I'm just an extremely curious person. So I was fascinated by the intersection of technology and the business world. Because at the end of the day, you can write code as a hobbyist and you can have a lot of fun. But if you're going to turn that into a profession, a career, then you can either go work for a company and write code for them based on some PM's requirements, or you can build your own company. And the latter is a lot more exciting. um, but little did I know coming out of engineering school that going to work in electronic trading, which is what I did coming out of Cornell, doesn't necessarily teach me how to build companies. Anyway, I did that for a few years. I was an engineer and then a product lead, rolling out algo trading products for Morgan Stanley. Eventually, I ran my own trading book. Learned a lot about, I guess, myself and risk management and building a portfolio. Because we were basically trading capital market instruments. But that itch in me to actually go out there and leverage my skill set to build companies was still very strong, and actually it got even stronger after 7 or 8 years on the trading floor and having a lot of success. So I decided that now would be a good time to get an MBA to sort of like learn a little bit more about the broader sort of you know business world, if that means anything, and all the functional areas that go into building a company besides just engineering and R&D. During my MBA is when I was first exposed to VC. So I took a class similar to the class that you guys are in, called PVC Lab at Booth, where I interned with Jump Capital, which is a growth equity firm in Chicago. We and part of the so there's an academic component to the class, and then you also get the practical experience working with a real VC fund, and just loved it. A lot of stuff was, I guess, as a technologist, you think a lot about like, what is the value that's being created fundamentally. What are the capabilities of the technology? Is it true value creation? Are we making something better, faster, cheaper? And then how can we scale it up, right? Like, it's no good to just build something and leave it out there in the ether for someone to download it. You have to market it, scale it up, build a company out of it. And a lot of that was being formalized and professionalized at Jump Capital. And I was literally like just drinking from the fire hose and learning a ton. And fast forward a couple years out of business school, once I was in a little bit better financial position, I decided to start my own fintech company and also start working with a lot of local startups. I had a lot of friends from my engineering days who had had a career, working for others, and now they were building their own startups. So I started advising them, and I started building my own fintech startup. And in the process of fundraising for that company is when I stumbled upon VU, and the rest is, I guess, history, in the sense that I came on board with the idea to basically build my company still in the background, but just got totally sucked into investing and building out our platform at VU. And now I've been here for the last 4 years, investing in early stage companies. We've done about 65 investments in the time that I've been here. So we've been very, very active, which is also one of the reasons I haven't really had a chance to focus on operationalizing my company that I wanted to incubate. But that might still happen. Yeah. However, it's been a blast. Just learning from Sky and Andrew, the founders of VU, and my GPs, and also meeting a broad base of founders across all verticals and industries.
Amazing. That sounds like a amazing roller coaster journey. And yeah, and you can still working at your startup maybe, yeah, in the future.
Yes, it's
Uh,
gonna happen.
Best of luck for that. Amazing. Again, I mean, you said you've made 65 investments at VU in the last 4 years. Like, what are some of the key lessons in venture capital? Like, what makes a good investor? What do you think?
What makes a good investor? That is such a difficult question, right? Because at the end of the day, I'm going to use like a something from my finance days when I was working Morgan Stanley on the trading floor. When you exited the trading floor, there was a big sign that said, "Have you made money today?"
Mm,
Right? And like that was, I guess, like the height of capitalism. We were on a trading floor at a big investment bank, and fundamentally, that's what it boils down to, right? We are in the money management business, and you see a lot of VCs talking about, a lot of things, but at the end of the day, they have to return capital to LPs, and it's the IRRs, the track record, the performance. Now, that performance is a little bit longer to measure in venture than say, day trading on a trading floor. So, there's a lot of other factors that go in, not because of the performance is longer to measure, but also um, to be able to be a good investor, you can't just, you have to source great deals, you have to attract great founders, you have to have an eye for understanding if a founder can actually execute. Um, do they have some particular insights that no one else does? Can the story tell? So you have to have an eye for judging those things, and then you also have to do a lot of work to support your portfolio companies because sure, you can write a check and sit down passively and hope for the best, but that's it takes a village, and it's again a cliche statement to build a company, and we are probably one of the biggest stakeholders of that village as investors, and we have a strong responsibility as board members or not to support the company with their additional fundraising efforts, with their recruiting efforts, with and also eventually driving towards an exit. So it's a lot of those things that get backed into eventually being so-called a good investor with a strong track record. Fundamentally, it is a people-oriented business. You have to be able to build strong relationships with trusted people. You sometimes, a lot of times we don't invest in first time we meet with the founder, but we might end up investing, say, 6 months, 1 or 2 years down the line, or maybe in a subsequent venture that they do. So just being honest, being genuine, being authentic, giving feedback to founders, even if it's, for the most part, 99% of the companies we speak with, we pass on. But, giving feedback in a manner that's helpful to them, and building a relationship of trust where, they want to come back to you, whether it's advice, whether it's a subsequent venture they're launching, whether, they want to fundraise for the existing venture, and being able to showcase your value add to them. So they want you on the cap table. That's how you win deals. So there's a lot of these factors that come in to being a good investor. And this is obviously not an exhaustive list, but these are, I guess, things that come to top of my mind right now.
Amazing. So I think my takeaway would be people and being honest and authentic. And
Mhm.
even when you're like passing on companies, you should be able to build relationships. That's great advice. Um, Again, so let's move on and move on to the next question. Like, what are the things that you look at to evaluate potential investments?
Yeah, so it is a little bit stage dependent on a, I guess, hard metrics level. But more holistically, something you can abstract out across like all stages. And we invest pre-seed, seed, Series A, a little bit of Series B. So we are going all the way from like say 2 founders and an idea on a piece of paper, all the way to like real solid traction and at a stage where they're scaling up. But the 3 factors that we discuss the most are what does the company does, why does it matter, what is the ROI, what are they doing in terms of what are they making better, faster, cheaper, and what is the magnitude of that improvement, and how do they make money, right? Those are the 3 things we want to understand. Separately, market sizes matter a lot. Like just given venture economics, you have to effectively back companies that have the potential to get really, really, really large. And that market could be today, that market could be into the future, but we have to have a strong, I guess, thesis and conviction around the fact that there is a big market and an underserved opportunity here that the founders sort of, or the founding team slash their employees are sort of building into. Um, and then, as I said in my previous answer, while we are evaluating founders, some of the key things we're looking for is what are the insights that they have, um, can they execute, and can they storytell, right? Because the job of a founder for the most part is to raise capital, is to recruit people, and to bring on customers. And all of those, a big part of all three of them is being able to tell a story in a manner where you attract individuals across all these segments to come and be part of your vision. So those are all the factors that we look at.
Amazing. And like, do you also look at certain type of investments, certain type of industries, or like you're agnostic uh, towards that?
Yeah, so at BU, we are agnostic across all sectors. We have a large team of associates that we can lean upon, to go very deep across even really esoteric sectors like, cultured meats or space tech. Um,
Right.
we can do a lot of really, really great due diligence through just our network across our portfolio and also across our alums, where, we are able to make fairly educated guesses across all sectors. And so we look at all sectors.
Amazing. That looks like three great points to look at. Now let's just move on and talk about like one of the recent additions to your portfolio that you are particularly excited about.
Yeah, that's a good question. We just did an IC yesterday, and given that we haven't announced that deal yet, I'm actually very excited about it, but I can't really talk about that yet. We
Sure.
can do a follow-up interview in a few weeks, and I'd be more than happy to tell you about that
Sure.
company.
Yeah.
But a couple other companies that we've done recently that I'm very excited about, mostly because they're super early stage, and that's where I love to come in. And these were both companies where we backed them as literally the first check, not just the first institutional check, but literally the first check. And um, one of them is called Fintor, and the other one is called Odyssey. And they're both in the fintech space. Fintor is a company that's basically fractionalizing real estate and making it available to the retail investor for, at ticket sizes as low as $5. And there's a lot of things that they're still pre-launch. They're going to be launching soon. But there's a lot of like things that they've been working through over the last 1 year to ensure that, they can actually bring their product to market in a manner where it meets, customer demand, and specifically what the retail investor is demanding and asking for. So it's just such a large market opportunity, and they're unlocking this asset class that's otherwise unavailable to a lot of their target audience. That, I think it can be hugely impactful, but also, as a result, also become a very big company. Um, the other company, Odyssey, they're building, I guess, what's the best way to put it? I don't want to butcher it for the founder, but basically, um, they're building a finfluencer platform for, again, for the retail investor, right? So finfluencer is, I guess, a bit of a new word, but you've probably seen the trend of a lot of these day traders and other finance experts and geeks, all the stuff that's happening in Wall Street bets, who are putting out advice, and sometimes even monetizing it through their own Discord servers and Discord channels.
Right.
But there isn't really a dedicated vertical sort of marketplace for that kind of play yet. So these guys are building out a platform where, it's not just advice, but your actual portfolio and your trades are shown. So there's a lot of transparency. So you see whoever's doling out their advice, you see their book. So it makes their advice much more authentic and accountable. But B, it allows them a way to build a followership. Um, it allows them to be able to monetize their advice, and also, I guess, for like the other side of the marketplace, which is, retail investors like myself or anyone else. It also makes it easier for us to find these influencers, as opposed to like having 20 different Discord servers that we go and join. So again, this company is just in beta testing, and I think they haven't publicly launched it, or maybe they have.
Right.
But I've used their app as a beta tester, and I'm pretty excited about them.
Amazing. That sounds very interesting. Okay, so
Yeah.
yeah, I mean, so you talk about your own company in fintech and your investments in fintech space as well. Just curious about like what are the some trends in investing in especially venture back investing that you are excited about, like where more venture
Hmm.
money could go in the future, or like any trends that you could talk about would be interesting for our students.
And yeah, I mean, I don't think I have anything new to say there. I think fundamentally software slash technology is still eating the world. And that gets me excited, particularly as a technologist, as an engineer myself, right? It's
Yeah,
just once there's just opportunity all around you to digitize things, and just fundamentally make people's lives easier, and take out frictions. So we like to, and I didn't say this before, but another way to put what we're looking for is we're looking for founders that are basically just making things simpler, taking out frictions, and scaling that up to like the mass audience. And that's really what I get excited about. And most of it is through the application of technology. It doesn't always have to be, but generally, that is what it is that allows you to drive scalability and the unit economics that makes sense from I guess, from a modeling perspective. Well, not just modeling perspective, but also from the perspective of being able to realize a good return on our investment.
right.
But that's what we get excited about. More specifically, if we look at certain sectors, um, you know, like we've delved a little bit over the last 2 or 3 years in a couple of sectors that have been really fascinating to me because I've been learning along the way while making some of those investments, and it's just opened up a world that I probably wouldn't have been exposed to otherwise at such an early stage. And one of them is around cultured meats. So where you are, lab growing, say, animal fat and animal protein, and turning that into edible food. So we're investors in a company called Finless Foods, and a few others, Integra Culture, Nova Meat. Nova Meat is all plant-based, but they're also creating these 3D printed steaks, so to speak. So all about basically the future protein and the future of food, right? As we look to like feed or just generally service this demand for nutrition.
Right.
Um, and then the other sector that I've been really fascinated by is space tech. So again, the space economy is opening up. A lot of the space sector was previously, I guess, tied into national agencies like NASA or ESA, and a lot of that is getting unbundled now with collaboration with NASA, with collaboration across other space agencies. But
Right.
a lot of the only way you can like build that entire economy up is by bringing in private sector capital, bringing in really smart entrepreneurs, and there's a ton of them, and supporting them in their endeavors. And a lot of them actually end up working with the government and solving their needs and getting contracts from them, as
Mm.
along with solving private sector needs. So I've been also very very interested by everything that's happening in space tech. We invest in a company called Varda, um, and Varda is basically focused on manufacturing things in space, including pulling fiber optic in space. And fundamentally, the key problem that they're working on immediately is being able to bring whatever you manufacture in space back down to Earth. So like a safe, free entry. And there's all these little, if collectively, as long as entrepreneurs work on individual bits of like, I guess, picks and shovels play of the space economy. We invest in a company called Orbit Fab that's putting gas stations in space. So as you build out all these little bits of infrastructure in space, collectively, hopefully, this whole ecosystem is going to flourish, and it's just great to see how that's playing out.
Amazing. And nutrition and space, space is something I'm particularly very excited about. Amazing. I think this moves us to the last question.
Mhm.
But I think the most important one. What advice do you have for professionals, especially college students who want to break into VC space?
Yeah, work hard. Work hard. As I said it right at the beginning, that eventually the job that you'll get in venture, like with most things in life, right? There's a big part of serendipity involved in being in the right place at the right time. But you have to do all the preparation before so you can actually capitalize on those opportunities. So try and be the best at whatever it is that you do. Be authentic. Do it with like your full heart and passion into it, so you can actually rise up and shine as a star in whatever industry you are, and a thought leader, because at the end of the day, VCs need to it's it is very much a process oriented business. Outcomes are much more long term oriented, so you need to have a fair degree of courage of your own convictions, right? And the way
Mhm.
you have that courage of your own convictions is basically by being a lot of curiosity, but also having a proven track record of success where you have a level of self-confidence, that you can maybe at some point pivot into venture and back early stage companies, underwrite that risk, carry that risk on your balance sheet, and believe in whatever version of the future you do believe in, however crazy that might be. So build those foundations, work on that in your own head first, um, and then I guess on a more technical level, there's all these table stake things that you should at least have a certain understanding of, like how to do. Again, if you're super early stage, you don't do a lot of financial modeling, but fundamentally you should generally know how modeling, financial modeling, accounting, cap tables, those things work. You don't have to be an expert, but understand venture economics, um, meet a lot of VCs and founders. So you start to get a feel, you get a lay of the land, you start to get in the flow of what it is that is at the cutting edge right now, what sort of things the most I guess the most visionary founders are solving. And you have, it's good to have a stable of like strong investable opportunities in your back pocket if you ever meet another VC, so you can you have something to discuss that might be interesting to them. Um, and really, where the rubber hits the road is start investing. We're in a world today, and this wasn't the case 15, 20 years ago, where private capital markets are way more accessible than they used to be.
Mhm.
And you could be, AngelList and all these other platforms, SPVs that exist now. You can, even at very small ticket sizes, come in on all the way from like pre-seed to later stage companies, and that access, once you start plugging in, is there for literally anywhere. It doesn't matter what geography you're in, who you can start to work on that today, and you'll start to see deals. So start investing. That's really the best way to learn. You might make a few mistakes, you might have a few good wins, you'll have a few hypotheses, you'll underwrite certain risks, some will play out, some will teach you lessons. But really, that's the best way to learn, build a track record, and make a case for wanting to be a venture capitalist. Um, yeah, there's really no set path to get into VC. I think
Right.
by definition, well, not by definition, but by construction, the way it is an industry that welcomes a lot of diversity of thought and experience, because at the end of the day, we want to back founders who think differently, and for that we need people who are allocating that capital to think differently as well.
Mhm.
So there is really no specific path in terms of what you've done before, but having a proven track record of success, having courage of your own convictions, and being willing to work hard are very, very important key traits.
Super. Amazing. Great advice. That brings us to the end of the conversation. It was great talking to you, Akash, and thank you for taking us through your journey and all the great advice that you had for our students. And yeah, look forward to speaking with you again, and maybe also get to you to talk about the latest investment that you have made, which you didn't reveal this time. Thank you so
Yeah,
much. Thank you.
great. Thanks a lot, Ankur.